Hi, everybody. Welcome to Debits and Credits with Haas and Dawe. I'm Michael Haas, and we're here today to start a series of podcasts, which was really the brainchild of a friend of ours, Felicia Morris from Morris Media, who encouraged us to move forward with a podcast type of format. And we're proud to do that. But let's start by telling you a little bit about who we are and what we do as an accounting firm. The name of the firm, Haas and Dawe, started back in 1949, where my father, Morton Alan Haas, went out on his own, coming out of what they call the greatest generation from World War II, had moved to Los Angeles, had received his CPA license, and decided to go out on his own in December of 1949. That means last month we celebrated our 76th anniversary as a company. Well, my dad started out out of his apartment with my mom, Lucille Haas, as his secretary, doing all the typing back in the days, even before there was such a thing as an electric typewriter. And that's how it all started. I joined the firm in 1979, coming out of college with really no place to go because nobody wanted me. So my dad gave me a job, and I haven't left since. And as a firm, we've grown from the early days when it was my dad starting out on his own to where we are today with a staff of 28 people, accountants and bookkeepers and tax people and administrative people. And it's something where we're very proud of what we have as a company. But how did it all start? My dad had a couple of clients where he was working at that had to deal with real estate, which was then a fledgling industry called the escrow industry in California. After moving out on his own, he picked up one of the people he'd worked with before, and somebody who worked at that company had gone out on his own. And so the client load went from one to two and doubled. And then that client moved to another client into the 50s. And then the people who were at that company started having branch locations, which was the first escrow company in Los Angeles that had multiple locations. And then the managers of those locations decided to go out on their own, and they reached back out to my dad. And that's how our impact and our involvement with the escrow industry in California began. And since then, it has grown to where we handle more escrow companies as audit clients and tax clients than anybody else in the state of California, with about 27% of the market share. So we're very proud of that as well. So now let's go back a little bit and see how this growth happened. Back in the 1930s and 1940s is when escrow companies came to life in California. Now, the word escrow has different meanings all over the country because you get out of California, and particularly east of the Rockies, escrow has to do with more like the mortgage companies and what we out here call impound accounts, but where they would hold money for taxes and insurance over the life of the mortgage loan. But here in California, it became a different meaning where it was these companies that handle the settlements, buying and selling of real estate, the refinance of the mortgage loans. But what also happened in California, the attorneys were the ones who handled most of the real estate transactions. Now back east, this still is the case, but in California, these companies started organizing and opening up that would handle the transactions. And the attorneys, the State Bar Association in California, didn't like that. So it was in the late 30s that a treaty was settled between the escrow industry and the attorneys and the state bar as to what these escrow companies could do. And from there, it's moved forward to the point today that there are very few attorneys in California in 2026 who handle real estate transactions. It's these escrow companies and these escrow entities and these settlement agents who do the bulk of that work. Now, in California, there are four types of entities that can do escrow. One are the independent escrow companies. That's who we deal with most of the time. There are title insurance companies who have divisions that handle escrow transactions. There are real estate brokerages under the licenses of the Department of Real Estate that can have an escrow division as well. And then the financial institution industry, the banks, what had been savings and loans, and now credit unions, they also can do escrow transactions. And of course, I suppose that the outlying is it's still the attorneys, But an attorney can only do an escrow transaction if the only thing that attorney does in his or her practice is escrow. They can't have it as a sideline of their law practice. Now, what happened in the mid 1940s? This group of the escrow settlement agents formed their own independent companies, and it's part where there are about 700 in California now, most in Southern California, but throughout the state, that act as neutral third-party companies that'll be between the buyer and the seller, and dealing with the real estate agents and the title company to deal with the settlement and the closing of a real estate transaction, mostly the buying and selling of real estate, but also with the refinancing of the loans that are being held by the owner of the company, that they're known as mortgages. Now, these companies started out sort of fledgling on their own, sort of writing the law as they went along. And then in the early 1950s, 1951 to be exact, the regulatory body of these companies decided they need to have a law that would encompass what these companies do. Now, my dad, along with an attorney whose name was Milton Davis, whose son and now grandson are still very active in the escrow world, worked with the Department of Corporations, which was California's regulatory agency that oversaw the escrow world, to come up with what they call now the modern escrow law. And it's codified in the California Financial Code. And it sets forth the rules and regulations of what escrow companies can and can't do and how they do the transactions. And as with Mr. Davis and my dad, who put together and worked with the Department of Corporations to come up with wording on how best to deal with the legal side of escrow and how to deal with the accounting side of escrow. And a part of this codification and part of these laws is an audit requirement. And all escrow companies in California that are regulated by the state have to have an audit done every single year. Now, this Department of Corporations, it has changed over time. It became the Department of Business Oversight, and now it's called by the Department of Financial Protection and Innovation. We call it DFPI for short because the name itself is very, very long and a tongue twister at times. And so what these audit rules say is that every year, the escrow company has to have a financial statement audit done of its books and records. And also, we're required to look at what goes on with the escrow account, what we call it a trust account, looking at different transactions during the year that they've had, or they've handled an escrow, or they've been this third party, neutral, independent third party between the buyer and the seller to make sure that they're following the rules and regulations of the state. And it's something that we do, like we said, we do every year for these companies, and it's something that we deal with to keep them out of trouble. Now, how can they get into trouble? Well, the easiest thing is they can steal money, and we try to make sure that they don't do that. And 99% of the companies over all the lifetime of this industry have never stolen money. It's something they take very personal, and something they're very, very proud of the fact that they handle other people's money. And so the rules say within the Department of the DFPI rules and regulations that how escrows get done and how the laws are written deal with how the escrows get done. And that's something that we do. And so we've established over the last 70 plus years a relationship with the Department of Financial Protection and Innovation. We work well with people who work for the state, with the managers and with the supervisors, with the special administrators, with the commissioners and the assistant commissioners, where we have a working relationship. As I like to tell people, we don't tell them what to do, they don't tell us what to do, but we get along. And whenever something comes up where we need resolution, we work together to resolve it. There have been many times over the past decades that we've worked on ad hoc committees with members of the department to come up with solutions to sticking points or how to move forward with other areas within the industry that will satisfy the department. Because keep in mind, the DFPI, its mission statement, so to speak, it's not about regulating an escrow company, it's about consumer protection, because they understand that with these real estate transactions, you've got people's money involved. You've got people's real estate involved. you've got a buyer who's willing to put out more money than they can even imagine in their lifetime, and you've got a seller willing to turn over their property with the assurance that they're going to get paid. And it also involves you have a lender who's loaning money against the property. So everybody wants to make sure that it's being done properly and it's everything's being covered, that no, the money's getting where it needs to be, the deed's getting where it needs to be, the loan's being done properly, and the real estate agents are getting paid for the services they provide. So that's been a very good relationship we've had that my dad started back in 1949 that has continued to grow and is very healthy still today. And with these escrow companies, though, they do more than just having to deal with escrow and with the state regulator. They're companies, which means they have to pay taxes. And so they have to have a relationship with the IRS, with the California Franchise Tax Board. And so we do a lot of work in the area of preparing tax returns for these entities. Now in California, they all have to be corporations. So we've gotten to be very well versed in the area of corporation tax law. And we have established a relationship with the IRS and with the Franchise Tax Board. And where again, we don't just get our way with whatever we want to do, but we understand the laws. And when questions come up, we can work with the IRS, we can work with the Franchise Tax Board, and how to get items resolved. We have different ways that these companies are impacted with government. They have to do with let's say they owe taxes on money they make, or let's say one of the escrow transactions, the buyer or the seller owe money back taxes to the IRS. Well, there has to be involvement with getting that released or getting that resolved, and working with the franchise tax board because as you will find out in a future podcast, there are certain withholding of tax rules that escrow companies have to deal with. And so we have a very good working relationship with the franchise tax board and part of its different departments to make sure that things are going well and that these companies are not going to get into trouble. Because one thing that wigs out clients more than anything else is if they get a penalty notice from one of their regulatory bodies, whether it be the DFPI or the IRS or the franchise tax board. So we tell people that our main job is to keep you out of trouble. And it's one thing about being able to do debits and credits, which we do very well, but there are a lot of CPAs in California who debits and credits. But we deal with the escrow industry and we know that industry well and we know how to keep them out of trouble. So that's a big goal of ours. One other agency we work with a lot is the AICPA, the American Institute of Certified Public Accountants, which has now become the Association of International Certified Public Accountants as it's taken on more of a global focus. But again, over the years that we've been working with escrow companies and we've been a firm, we have a very good working relationship with the AICPA. We have good representation from that agency. We have good contacts there that if we have an issue with an accounting problem or a tax problem, we can contact people who work for the AICPA and they can help us resolve items. And so this collaboration working as a team. And we've told people we're not going to be a one-stop shop for anybody. We don't have to control everything. We're going to work as a team, whether there be other accountants involved, whether there be attorneys involved, whether we have to work with the DFPI, we have to work with the IRS, FTB, or we have to contact the AICPA with different accounting issues. And we're going to talk about over the next few weeks of these podcasts, you're going to be hearing different involvements we've had with these agencies and how we've all worked together. So now, let's take a deep breath and let's look back at our history some more. I joined the firm in 1979, and when we started, we had 17 escrow company clients. Today, we're over 200. And when I started, it was my dad and myself, my brother Gary, who had started 3 years before, and my dad's secretary Pat, who had started with my dad back in the mid 1960s. And we just grew and we grew from there. And one thing that my dad taught me as I got more involved in the firm, and after I passed the CPA test and became licensed, is it's about giving back, not just about taking. And we got involved in different areas, and we got involved with trade associations. We got involved with our local CPA association to become involved and to stay active and to learn about the different parts of the industry and learn about different parts of accounting so that we would make sure we were out there and visible and we'd always be learning. And as you can tell from me from myself so far, I'm a little bit passionate, maybe a little bit crazy passionate about our firm, and I'm also passionate about our involvement in the industry, and I'm passionate about education. We're very big on continuing education in this firm. It's important to me that we go out and take classes. We go to conferences. We go to seminars. Now, in today's world of the technology, we do a lot of webinars. And I know it's very common for very, many of our staff people during the day will listen to podcasts in areas that will benefit them in doing the work they're doing relative to what we do with our clients. There are a couple of trade organizations for escrow that we're involved with. The Escrow Institute of California, which was formed in the 1940s, is a trade organization for the benefit of the independent escrow companies and for the owners of those companies. There's also the California Escrow Association, which deals with all escrow entities in California, not just independent, but those that are from title companies and real estate brokers and savings and loans and so on. We also deal with the American Escrow Association, which is on more of a national level of dealing with regulatory changes from tax law that impacts the sale of real estate and what goes on from across the country. And it's more so from the western part of the United States, but there are various states involved. And it's interesting that when we go to the conferences for the American Escrow Association, that you hear these speakers that address topics that impacts everybody. And you think that, well, how can somebody do that help someone in California versus Oregon versus Nevada or Arizona or Nebraska or Alaska or Hawaii? But they do. And it's something that there's a common thread and a common goal that all these escrow providers have. And when you go to the conferences, you hear them talking among themselves. And I always tell people, we do a lot of presenting at these conferences. People are going to learn more from talking among themselves than they're going to learn from listening to me babble on for an hour or an hour and a half. And part of what I try to do, and I'm not sure the participants realize it, there are times during the session that I allow questions and I want people to ask questions, then I'll just shut up and I'll just step back and I'll just listen to them start talking among themselves as they address the question that's been raised. And then after about 5 minutes, I'll get back in and find out what did we accomplish and what do they think and what are the commonalities we're talking about. But that's where they're going to learn. And it's interesting because so many of the people who come to the conferences, they'll say that they're very shy and they'll say they'll want to sit in the back and not participate. Then all of a sudden you get their juices flowing and they're very vocal and they're very active and they have something to say and they have experiences to share. And it's just really to me, it's fascinating to learn from them so we can learn as a firm how to move forward. Our role in the escrow industry has grown over the time. And in some ways, it's hard. How can you grow from being part of the impetus back in the early 1950s that my dad was involved with? But we have because we've seen the industry grow. It's expanded from a couple hundred companies. In 1989, there were over 1,000 companies. Now it's settled down to about 700. But they're very passionate about what they do, and it's very important to them. And even with all they have to deal with in today's world of more technology and faster moving economy and interest rates up and down and all these different factors that impact them, they have a lot on their plate, and we have a lot to be able to stay involved with them on. And sometimes it may be something that's talking them off a ledge when they get concerned about a new law that's passed, or trying to make sure that in a quiet economy that they're going to be okay. And what does it mean of what the last tax bill that got passed, or what does it mean with what the Federal Reserve is doing with interest rates, and all these different factors, and what's going on in Sacramento, what's going on locally, as local cities are passing different laws, and all these different factors that affect real estate. And so we're proud of the fact that we can maintain a role in the industry with the industry to help them get through some of these troubling times, make them realize there will be a day tomorrow, and the escrow world is going to continue, and it's not going out of business, and the sun's going to come up, and all these positive factors, so they can feel good about the next day. Because nothing excites an escrow officer more than closing an escrow, and particularly if it's a first-time home buyer, to see the energy on those people's faces when they know they now own a house, that gives them a lot of satisfaction that they were part of that. So what's coming up? We have in probably in the next 3 to 4 weeks, we're going to be talking about specific parts of escrow. We're going to be talking about some certain tax laws that impact them. We're going to be talking about some agencies that impact their world. We're going to be talking about the economy. We're going to be talking about, like I said, taxes. We're going to talk about what are interest rates doing. We're going to see if we can prognosticate or predict, pull out the crystal ball, and what we can do to make everybody feel better about this crazy world of escrow. It's pretty fun, and I think that what we're going to try and cover and help everybody enjoy over the course of the future podcast is that what a moving target this all is, and how some little things can create the big things. Now, some little nuance in tax can then give opportunities, but also scare a lot of people as to what's going on with their transaction. And am I really going to close? And then we have certain outside factors. Even it was just a year ago that we all had to deal with the fires in Los Angeles County. And 2 years ago, we had to deal with the floods. And before that, we had some wildfires that were in other counties and all over the state. So all these things impact what goes on with escrow. So we're going to talk about that too. We're going to try and say as positive as possible. We're going to take some of the negatives and turn them into positives. And we're going to just give some positive energy so that you know that what Haas and Dawe does, not just debits and credits, is how it impacts our clients and what we're going to do as far as taxes go and accounting goes. Because you're going to hear about some of the battles we fought, whether it be with the government, with the AICPA, when we don't like a standard coming through that we feel it impacts our clients in a bad way, we talk about it. Sometimes we ruffle some feathers, but that's not going to stop us from going forward. Because I think the communication is one of the keys around our firm. And also I think in just in business today is communication. Because someone once said, if you've got a committee and everybody agrees all the time, then what do you need the committee for? You need to have take and give and take and point and counterpoint to talk about things and work solutions out. So get ready for some upcoming podcasts and some excitement from Haas and Dawe. The debits and credits are coming your way. Thank you.